Ajay Srivastava is with us, Managing Director, Dimensions Consulting. We are about to start market open today. Ajay, should we be ready for more in this rally?
I think so. I think, Prashant, there are a little more legs to go, but I think there is also an element that people need to stop putting fresh money and recalibrate their portfolios, if not lighten the portfolios. So rally has legs, certainly, but I think there is a word there to say that we need to take some money off the table or perhaps recalibrate our portfolios and use this opportunity, which we have got after a very long time to redo
that
our
point in just a bit. The market has opened, Ajay. Let me just focus on the prices as they're coming up on our screens. So you got BHEL up 1.25%, Lupin, which is starting about 1% higher. K in India is up about 1% or so. L&T is up 0.6, 0.7% at start. Vedanta is up 0.5%. Reliance Industries is up 0.5%. You got Tata Motors up 0.5% or so. Vedanta is up 0.5%. Bosch is coming up with about a 0.75% gain. That's about a 12 rupee move. L&T is picked up a little bit more, 15.45, 15.50, nearly there on L&T at this point. Adani Port is at about 240. It's down about 1.25%. Adani Port. Asian Paints is down another 1%. Asian Paints has been weak. Most paint companies haven't been weak. Asian Paints has been weak. Kotak Bank is down 1%. HDFC Limited is down 1%. BPCL is down about 1% as well. Then there's Infosys, Bank of Baroda, Ambuja Cements, Yes Bank and ACC, which are lower as well. 18 stocks up and 32 stocks lower. That's the tally on the Nifty 50. I mean, K in India is the only stock which is up over 1% in trade right now. It's followed by Coal India now settling down. Coal India, Bosch, Lupin, Reliance are some of the other stocks which are coming up with values. Lupin was down to about $1,500 yesterday. It closed at about 15.35. It's at about 15.45 now. So it's, from day before yesterday's low, actually from yesterday's low, the stock is up almost 50 rupees. That is Lupin for you. 15.50, yeah. Now clean $50 off the lows. It's lost quite a bit, remember, last week till yesterday's low. And then, of course, it recovered, was still down 1 1/3 by close, but is picking up a little bit. It's the top gainer now, by the way, on the Nifty. It's at 15.55 now. That's about 1.4% higher. 15.60 now on Lupin. Nearly 15.60 coming up. That's a 24 rupee gain on that stock. Bosch is up as well. 19.50, 19.56, 19.593. That's also moving up a little bit. 250 rupee gain. K in India 158, BHEL 113, and Tata Steel at about 305 or so right now. So that's the start at this point in time, but give it some more time and we'd have more to talk about. But the broader market picture is also going to be on your screen. Let's move on to that. Let's look at what's happening, moving price volume wise, and we'll have all of that up on your screen right away. 40 lower on the Sensex and 20 lower on the Nifty is where we are 2 minutes in to the market open. Ajay, please continue. I interrupted you there. You're saying that, well, maybe a little bit more to go, but one should start taking money off the table here.
Yeah, because Prashant, you're rightly saying let's not understand the rally only from Indian context. It's a global rally. We all know about it. Money has moved in from central bank to negative interest rate into the economy. Fundamentals continue to go downstream, and we are not looking at a very great turnaround story of India. So really what dictates a rally is pure liquidity at this point of time. So we had fundamental pessimism sitting in Jan to February to early March. Now we have a liquidity optimism that, listen, foreigners are buying, so we should buy. Not necessarily a right condition, but you ride the rally and you take money off the table at the right time. I think this is the bottom line. This is not a time to start buying aggressively and saying the next rally to 9,000 may happen, I don't know, but I believe it should not happen. But this is a time to see that wherever you were stuck in the portfolios and the share price has taken a 20-30% recovery, you may want to take some money off the table, certainly the weaker names, including some of the stronger names like HDFC, etc. I would believe that if you got money in that, you could take the money off the table because you got one last opportunity before the March results come in, and March results might be a little bit dampener to the market compared to the optimism prevailing at this point of time.
You're absolutely sure, Ajay, that nothing is changing fundamentally, right? This is purely liquidity, a big bounce off the lows, and that's about it. Nothing is changing fundamentally.
In fact, Prashant, we are of the view that fundamentally things have gone worse than what they were in the last quarter. And I would beg for some of the people, listeners, to go and read. There's a very good transcript of Concall's chairman's conference call after the Jan result. You must read that, the transcript of the Concall as to what's the true state of the trade in the country. You must talk to FMCG majors as to what they are seeing in the market. The demand scenario is pretty distressing. You talk to the car companies, you walk into any car showroom, the discounts are abundant there. It tells you a great story. The retail buying has slowed down dramatically. And you will see as the results go forward that perhaps, I may be anecdotal in my evidence, but when I collect the evidence, that the March quarter for demand side looks to be a little more worse than even December. We were looking for a recovery. We might be even further negative. So fundamentally, I think we are looking at a much weaker economy in the month of March result as they will show up. Yeah, you can always build a portfolio based on a turnaround story that over the next 1 year it will recover. That's one way to look at the market. But on the immediate horizon, you have results coming in which might show exactly the opposite picture of the current optimism.
Yeah. But as they say, hope never dies, right? Hope floats. And the nature of, I guess, not just market participants is, but human beings rather, is to be optimistic, is to look up, right? You count the numbers up, you don't count the numbers back. It's as simple as that. So there is always some story. Things get worse, and the story that you hear is, well, this is the worst. Things are bottoming and stuff like that. But the reason I asked you that question is fundamentally anything.
I would like to believe that.
Yeah. No, the reason I asked you if fundamentally anything is changing is because sometimes markets do tell us that things are changing on the ground way before. It doesn't feel that way. I completely agree with you. But sometimes they do. I mean, and they're far ahead in kind of sort of signaling that change. So I just wanted us to be cognizant about that as well. But you're very clear, nothing of that sort is happening. It's actually getting worse.
See, Prashant, you need to take your cues from the political establishment. People tend to bring the best strength forward when they go to the public for votes at the end of the day. So if you're, I'm not a part of a political process and I'm not an analyst of any kind, but I would tend to believe that if you had a strong economic story, there was no need for all other diversions which is happening in the system today. Why is there a need for the narrative to change? Is perhaps the story that on the economic side, there is not enough to talk about. Maybe today, at the feeling, maybe it will turn around. I don't know the answer. But certainly as we sit today, I don't think so. There is a story of jobs, trade, commerce, finance, business turning around. And if you take the NPA story forward, now that's more worrisome. You have put three paradigms to the NPA story. One is a very clear statement, we will recover every penny. Now, when you recover every penny, really speaking, in a distressed company, that perhaps may be impossible as a task. So you're ruling out settlements by and large and saying we'll force a company to liquidation. That's not a very nice way in an economy which is struggling. Number two, the NPA process inevitably, the way it seems is going to lead to a lot of dislocation because we have let it fester. I'm not saying government's fault. We let it fester for so long that it will cause its own series of tribulation in the market. The employment front is not looking very ideal. The export is kind of slipping at this point of time. So if there was an economic recovery narrative, perhaps that would have been on the center space agenda in all our discussions and not the other stuff which none of us want to be actually talking about or wasting our time on. We would love India to move forward. We know, as you rightly said, most of us are long investors in the market. If you ask me net funds, perhaps net of plus and short, I would be still long in the market. So we all want markets to go up, but is that the reality and is that what we advise our customers? We need to advise a little bit of caution. The liquidity will drive rallies. Fundamentals are not picking up. And we're in a very strange world where the economies do worse, the stock market gets better because central banks pump in the money. Nothing wrong in that, but you need to learn to ride this rally and learn to step off when the time comes, when the money risk is off the table. The problem is, with all this SIP investments and people have been encouraged, buy at lows, etc., even when risk is off in the global setup, Indians are still investing, and now they're withdrawing the money when risk is on. So we are really trading on the opposite side of the global phenomenon.
You brought out Container Corporation of India. Let me give you an example, Ajay. So, in the Indian Railways container volume has declined 8% over January and February 2016. Yeah, and this is, 8% is a big decline. Now, you can turn the story to say, well, this is how worse can it get? Yeah.
No. If you read the reason for this, the two reasons for this, I think one big reason is there is an anomaly of service tax on this which has been levied. That's one anomaly on this part of the stories. The second story perhaps is that the trade itself is dropping off. So if you look at the transcript you'll read is, you'll find two reasons. One is extra service tax, which makes it more expensive. And number two is this thing. So, and number three, the railways are increasing the rate year on year.
Sorry to interrupt you there. Sorry to interrupt you there. I made a mistake. Apologies for that. Actually, the container volume which Indian Railways carried fell 8% in the second quarter of financial year 16, but Jan and Feb, it fell just 3.4%. October to December, the decline was 8%. Jan and Feb, the decline is 3.4%. Actually, it's gotten better. It's fallen less. That's the story. I just wanted to correct that. Go on.
Fallen less doesn't hurt. Fallen less is a nice thing to say, but the fact is that fundamentally is going to get worse, because as you go down the path of the pay commission, you'll find the railways increasing the rates further, making it more uncompetitive. So, on the base of it, your economy is getting more and more uncompetitive with the cost structure moving up. Export in market is becoming more competitive as China, etc., put in extra capacity in the market. So you are really squeezing your big bunch of manufacturing called export in the country with employment, tax, and all other consequences. So which is why I'm saying that if you look at the very basic fundamental factors, we are not going in the opposite direction. It should be running into positive numbers by now. When you say it fell less, means maybe at some time it will narrow out and become zero perhaps. If it has fallen so much, it can't keep falling every year on year. But that's not the answer to the growth story, which is talking about 8 to 10% growth, Prashant. And for the stock market, I think that's more important for people. If you need to believe into the story, today I would tell people that you want to believe into the story, you need to hold on to your portfolios for at least 2 years time frame. But much can change in the 2 years in a global context. So it's not, it's easy to take a decision on Indian context, but the fact is that stock prices are being driven by global central banks and the liquidity flows. We saw in the last 2 months, Indian DIs were buying every day, but the stock market kept falling. So which tells you a story that you may do whatever you feel like in India, but you are linked to global scenario, and the request to investors is focus on the global liquidity flows more than just the turnaround story in India, because that is what dictates the share price. And we have seen that in the last 2 years. Every March there is optimism. March 2014 to May 2014, March 2015 we had a new highs in the market, and then we went down all the way to 6,800. March 2016 the same story is being repeated again. So element of caution, perhaps March 16, 17 will be different, but nothing on the ground tells us is going to be very different.
So then, it's kind of easier for us to track what's happening in the local economy. It's harder to look at what's happening to global flows, and because money is fungible at the end of the day. Who's printing how much, pumping how much, where is that money going? It's harder to do that. Of course, directionally, one can now say that there is easing going on everywhere. Most large economies, central banks are easing, pumping money, trying to sort of push up their respective economies. So what is to say that this, we won't get into the cycle once again? Asset price bubbles, stock markets going back to highs, etc., etc. The Fed, for example, is now expected to hike rates, tighten liquidity only 2 times, and that may happen only towards the end of this year. So you might have a bit of a clean run from here. Possible?
I think, I don't think a clean run is what's going to happen, Prashant. In my view, it's going to be a very, very volatile year at this point of time. You will have liquidity flows coming through, and then you will have the China's new numbers coming in, and if renminbi starts to lose flat again, you will have the same global issues coming across. I don't think it's going to be a flat run, which is why I tell people is that we need to bunch our investment contrary to the concept that keep buying at every stage of the market. That's a lesson here. So I'm not sure it's a straight line from here till eternity. I don't think that's going to happen, but I certainly believe that when you have, history has shown us that when you have such liquidity-driven rallies, not backed by fundamentals, you will have more and more volatility, and therefore the lesson for us is to keep taking money off the table time and again. These 3-year investment scenarios, horizons do not work in this scenario. If you look at year-to-year, 3-year scenario, most investors perhaps have not made any money at all. And then somebody will extend the argument to say, if you bought on May 14th only, then you'll get this return. But broadly speaking, 3 to 5 years has been a pretty bad scenario on equity standpoint. So, which tells you that this 5-year equal monthly investment is not the story to be got for. You need to be careful as to when you put your bulk of money and where you put a bulk of money. I think that's also important, because if you're going to put it in the wrong stocks in the wrong places, then you have a problem today. For instance, today, if you start buying big time PSU banks because you say, it's fallen down, how much more can it fall down? That perhaps would be a highly risky strategy. If you want to play this game with a yes bank kind of stuff, perhaps you are safer on the bet side that even if things go bad, there's a good chance of a good stock recovering back, which is what has happened in few of the private sector banks. I would not talk of leverage bank like ICICI and Axis, but certainly Yes Bank, IndusInd Bank, HDFC Bank have recovered back from their lows. So you need to, at this time, if you're investing, you need to find the right slots to invest. Maybe your returns are lower, but your risk of 20, 30% depreciation of your capital will also be that much lower.
Right. What are you, in absolute terms, what are you very bullish on and very bearish on?
Okay, in absolute terms, we are very bullish on, as I said, things like the construction place, we are very bullish on. We were bullish on cement because thanks to construction logical cement has run up quite a bit. So I will not be a buyer today in cement, but it's a logical place where place where government has done a good job. Let's be honest, is going to be the road construction, and that's place where you want to be. Today, if you want to buy the stocks, perhaps I would still try to be a counter buyer in a pharma stocks at this point of time because they have been brought down quite a bit. So it's giving a very good entry point. I would tend to buy perhaps even some of the PSUs today. Prashant, I was speaking to Sun Channel yesterday that some of the PSUs could be a good bet. Some of the people related to defense, etc., could be a good bet at this point of time. So you might see some revival. But it's going to be long term, so you've got to stick with it long term. So defense contract PSUs, private sector PSU companies in defense sector, that is a very strong conviction bias in my view. So that is one. And number 3 is I would, if you were to force to buy a financial stock, I would buy some of the private banks, but I would not buy the nationalized bank. In fact, at this point of time, disclosure, we're running a short position on them. So, what I'll definitely not touch at this point of time is perhaps metal stories because the run-up has been rapid. We're not very clear as to net of debt where they stand. So I'm not big buyer of any metal story at this point of time.
Ajay, it's a pleasure. It's a pleasure having you here. Thanks very much. And I hope we can
wonderful, Prashant.
get your views every week. Thank you indeed for that.